To get some insight into the natural resources sector, I sat down earlier today with Rick Rule, CEO of Sprott Holdings. Rick and I had a lengthy discussion about the energy markets, and I asked him how hedging will protect oil exploration and production companies moving forward. Take a look at the interview. Rick, with all the volatility ongoing in the natural resource sector, we wanted to get your view on where the pitfalls are today. So let's start with oil companies. I mean, obviously, that's a very big topic of conversation lately. And, you know, the Royal Bank of Canada has indicated that 35% of 2014 oil production in major and mid-sized upstream oil companies is hedged with an average price of $95.50 a barrel as of November. But some companies like Devon Energy have much larger hedges in place. So how much is this hedging going to protect these companies?
I think the next 9 to 12 months will see some of the more prudent companies, like Devon, as you mentioned, protect cash flows reasonably well. The problem will be in the more aggressive producers. Some of the U.S. Shale producers, as an example, that employ too much leverage on the balance sheet, had capital budgets way in excess of their free cash flow, and we're playing the leveraged game, in other words, leverage to the higher oil price. I think the results are going to be very mixed. Investors are going to have to look for at least another quarter in terms of the operating statements of the oil companies to see how much of the cash flow came from financial operations, i.e. hedging, and what sort of margin there is for these producers at $60 or $65 oil. It's going to be a very interesting quarter, to say the least.
And what about 2015? I'm hearing only 14 or 15% of production is hedged, and that means producers are going to be making a lot less money, no?
I think that's absolutely correct. You know, if you take a $90 pro forma into a $60 world, the $30 that comes out all comes out of margin. If you assume that these companies' all-in costs, including capitalized G&A, is $40 or $45 a barrel, at $90 a barrel, they were enjoying 50% operating margins. At $60 a barrel, it's much less pleasant, particularly when you're expected to return some of that capital to shareholders by way of dividend.
Absolutely. Now, do you think energy names are oversold here, or do you see more bloodletting coming?
I think that depends on the energy name. Some of the larger integrated producers will do reasonably well in this price environment. They have interesting businesses in that when the crude prices are high, they make money in exploration production. When crude prices are low, the margins in refining and marketing get fatter. So some of the senior oil companies will get through this fairly well. Some companies that are energy related, an example would be the midstream processing and pipeline transportation companies, will do fairly well. My suspicion is that if low oil prices sustain, the oil service businesses are really going to get slaughtered. The capital budgets for 2015, 2016 will get cut in a way that we haven't seen yet. Companies that have reduced their rig count, their active rig count from 20 to 15, may end up reducing it to 5, which will be okay for the producer. They'll limp through, but it would likely, in that case, be catastrophic for the oil service businesses.
Rick, where are the buying opportunities in the natural resources space right now?
Well, I think there are buying opportunities coming up in the oil and gas sector. I suspect by the end of 2015 that both oil and gas will be sort of parenthetically 4-letter words as opposed to 3-letter words. What's hated right now? I would suspect that coal is hated right now. Hated more because the decrease in natural gas prices will put additional pressure on coal. I think uranium is hated right now. I think that the platinum and palladium sector, which we've talked about before, at least in terms of buying the physical metals, has a pretty attractive outlook. And I'm reasonably attracted to the better precious metals producers. I don't think they're cheap, but I don't think that they're ever cheap. I think that the industry has gone about a quarter of the way that they need to sort of redeem themselves from their operating and investment failures of the past. And so that looks fairly attractive to me. And of course, I always like, although it's very difficult to play, the U.S. water business.
Interesting. Now, Russia, Rick, it's very levered to oil, and international energy companies like Gazprom and Lukoil are trading at a price of 2 times earnings. That's ridiculously low. So is this a buying opportunity?
I'm embarrassed to say I don't have the courage to buy either Gazprom or Lukoil from my clients, but I've bought them both personally. Russia is hated, oil and gas is hated. The ability for the Russian oil and gas industry, if it were allowed to by the state to reform itself and become more efficient, is very large. So the upside running room, assuming that politics doesn't get in the way, and of course that's a difficult assumption for Russia, provides so much upside that I personally, as a speculator, couldn't resist the opportunity. As I say, I haven't had the courage to do that for client accounts because I'd rather risk my own cash as opposed to my reputation. But a contrarian speculator has to look at the energy sector and has to look at Russia and has to say, every part of my training tells me that this is one of the most hated sectors in the world, and thus it probably has to be owned.
Well, I know if your PA is in it, something worth looking at, that's for sure. Now, you know, when I tune into financial TV, I hear everyone acting like the ruble's fall weakens Putin's hand significantly. So do you believe that that is the case?
I do. I believe that the Russian economy, with the exception of the energy sector, is an absolute basket case. I think that a falling ruble would give a Russian manufacturing sector, if one really existed, an interesting leg up. But I struggle to find a global industry other than energy that Russia is competitive in, with the exception of low-end weapon sales, where they're beginning to run into competition from other places like India. So it's difficult for me to see how a lower ruble can do anything other than hurt Mr. Putin's foreign policy aspirations.
And what about Canada? You know, ostensibly the country is levered to natural resources, and that's going to be a problem for the economy and for the currency. So how are you looking at Canada in terms of the natural resources sector?
Well, I agree with you completely. I think the current fiscal stability of Canada is due to 2 very fortuitous circumstances. One, the fact that the country, was borderline insolvent in the early part of the 1990s. The consequence of that was that Canada was effectively frozen out of credit markets and therefore didn't borrow. It wasn't that Jean Chrétien was fiscally prudent, it was that he had no alternative other than fiscal prudence. And the consequence of not being able to borrow is that they didn't. They were under-levered relative to other Western economies. The second great thing that happened, of course, is that Canada was richly endowed with oil and gas, and the ability of the state to receive 25% of the economics from the energy business by way of the social take, royalty and tax, has done a wonderful thing for Canada. Unfortunately, Canada, as a consequence of strong energy prices, has been able to return to credit markets, and they have done so with some gusto, at the same time that the energy price has fallen. So I think on a political level, Canada is going to have an interesting time adjusting to their new fiscal reality.
So cheeky, that Rick. That was Rick Rule, CEO of Sprott Holdings. Time now for a very quick break, but stick around because when we return, Jim Rickards will be on the show. Jim dropped by our New York studio earlier today to talk to us about what he sees in the global economy right now. Then in today's Big Deal, Edward Harris and I are discussing tail risks and crises. And remember, you can see all segments featured in today's show on YouTube at youtube.com/boombustruT and on Hulu.